There has been a ton of buzz lately about how Nordic innovation could spell the future of financial services globally. So today we will be looking at the top 3 fintech trends across the Nordics, and who knows, maybe more than one will surprise you. Dear wonderful people of the internet, welcome to the Future of here at Nordic Fintech magazine. Many of you have written to ask us for a video on top Nordic Fintech trends, and this is it. My name is Chris, I'm a futurist at Nordic Fintech magazine, and we are delighted to have you with us in this channel where we try to remove all the jargon from financial services and make all the changes and transformation that the industry is going through easy to understand. So, as you probably know, the Nordics are well known globally for being a highly innovative and highly digitized region where entrepreneurs take a passionate approach to disruption with a distinct twist for minimalism and impact. It is therefore no surprise to see that Nordic entrepreneurs have been taking the market to task with solutions that leverage the exponential power of technology to absorb complexity and bring solutions to market that are both simple and functional. Now, today we're going to be looking at the 3 hottest trends that are picking up momentum amongst the fintech communities in all 5 Nordic markets of Iceland, Norway, Denmark, Sweden, and last but not least, Finland. So let's get into it. In third place, the trend we are seeing across Nordic markets is fintech solutions for SMEs. Let's go back to 2009, the year that marked the beginning of the current inflection point in financial services. Technologists, innovators, and visionaries back then, disgruntled by the oversights that led to the credit crunch of 2008, started to envision new ways of doing things, and the emergence of a new breed of technology companies with financial services expertise picked up momentum. Following in the steps of early fintech pioneers like PayPal, these companies went after the low-hanging fruits of payments and foreign exchange, which were 2 of the areas that were most ripe for disruption within financial services. Now, as these players nibbled at the edges of these markets, they gained popularity with customers and started to see their revenues rise, as well as their ability to attract private investment. Now, following a traditional land and expand strategy, they ventured into other areas of financial services like current account, loans, and investments. But for many years, the disruption was mostly restricted to the mass market. But that is no longer the case. Fintech founders across the Nordics are now finally addressing the previously untapped and underserved market of small and medium enterprises. So SMEs is a very broad term that can go all the way from the freelance designer working at home to the architecture firm with a few hundred employees. As such, the financial needs of this segment can vary significantly in volume, but not in substance. Most SMEs, regardless of their size, have needs for accounting, payroll, cost optimization, financial analysis, data security, but of course at a much lower scale. And one of the biggest deterrents for servicing this market from a fintech perspective has always been that SMEs have typically been slower in their uptake of digitalization. However, across the Nordics, we are now seeing the launch of solutions that help SMEs jumpstart the digitalization journeys through cloud or as-a-service models, making them affordable, easy, and faster to implement. In this place, we are seeing companies building solutions for things like invoicing, point-of-sale systems, self-service, cash flow management, payroll services, expense management, and of course, loans and financing, which are solutions that are using technology to make credit and other functionality available to SMEs with little friction and very high convenience. What's perhaps most interesting about these solutions is that they are not only helping SMEs address their changing needs in operating digitally, they're also helping banks develop a closer relationship with SME customers, which can lead to further business opportunities for things like cross-selling and upselling. So really a lot of overdue innovation is taking place in this corner of the market. Now, the second trend that we have been observing over the past 12 months is that of embedded finance. The origin of embedded finance started with open banking, which refers to the concept of making personal data a shareable asset. Open banking initial proposition was very simple: allow customers to determine who can access their data stored in banks' databases. This idea further evolved to allow third parties to also access some of banks' capabilities as a service. And in this case, you can think, for example, things like payments or KYC. Now, the whole concept of openness was a significant departure from a culture of confidentiality, self-sufficiency, and tight regulation that has always permeated financial services. Now, fast forward to today, and open banking has become a reality on which several companies are now building new services, new business models, and better and more convenient ways of servicing customers. And this is when embedded finance comes in. We could think about embedded finance as the ability of a customer to access financial services whenever and wherever they are, both in physical and in virtual spaces. Now, this idea of being able to embed all manners of financial services in unlikely places like apps on your smartphone or your car, and even electrodomestic appliances, has been a reality for several years now. Most notably, the trend has totally taken off in Asian markets, where embedded finance has become a lifestyle. Asian customers in markets like China, South Korea, Singapore, Malaysia, and Indonesia are accessing financial services like payments and loans on a daily basis, but not through their banks. In fact, they do this through super apps that concentrate all manner of activities from food delivery, mobility, ride sharing, investment, communication, and entertainment into single interface mobile phone applications from companies like WeChat, Grab, KakaoTalk, and Gojek. So momentum for this trend is building across the Nordics, and it's perhaps best evidenced by two significant transactions that took place recently across the region. Earlier this summer, Visa acquired Swedish open banking company Tink for a staggering 1.8 billion euros, signaling the onset of a fierce battle for the open and embedded finance market. A couple of months later, MasterCard made its competitive move by acquiring Danish open banking company Aya for an amount that is yet to be disclosed. Now, these two high-profile transactions not only signal a strong investment ahead of the trend in Western markets, but also a strong capability and vision that is brewing amongst Nordic players committed to the transformation of this space. And finally, our top trend for Nordic Fintech, drumroll please, sustainability and green finance. Sustainability is everywhere, with the world's governments and corporations vowing to cut down carbon emissions and to promote sustainable business practices that will benefit not just stakeholders, but all shareholders involved in the ecosystems that produce, distribute, and consume products and services. The Nordics have traditionally held a very strong belief that sustainability is simply good business practice. Being able to ensure the long-term repeatability of the process of production that helps companies bring their ideas to life is a primary Nordic principle that Nordic companies that want to build long-lasting and profitable businesses adhere to. Now, this ethos lies at the core of many innovative solutions we are seeing coming out of the Nordics, not just as the object of their business, but also as the purpose for why many Nordic entrepreneurs go into business in the first place. What is very interesting about the Nordic development is that companies addressing sustainability challenges are ahead of the curve, and they are already developing solutions that will help meet consumer demand for a better understanding of how their purchasing decisions and investment behaviors impact the things that Nordic consumers find important. And we're not just talking about challenges related to climate change. We're talking about a broader set of challenges that include things like equal opportunity, crime prevention, and renewable energy sources, which are important to many Nordic customers. In this category, you can expect to see examples of companies that are tackling the data and measurement challenge associated with ESG rating scores, companies that are democratizing access to carbon markets for micro producers of renewable energy, and from others that are creating secondary markets of goods in order to promote circularity in things like fashion and in electronics. Now, an enormous amount of innovation is taking place on the sustainability front from a variety of Nordic fintechs, many of which are shown in this chart. So make sure you check out their websites if you want to find out more about how their solutions are addressing many of the challenges perceived to be standing in the way of more sustainable lifestyles. So, there you have it. 3 trends that continue to reshape the evolution of financial services and that will no doubt leave their mark in the future of finance as the industry shift carries on. We would love to hear from you. Tell us what you think and let us know if you think we missed any important trends so we can cover them in further videos. And as always, if you want to find out more thought-provoking content around Nordic finance and fintech, you can always check it out on our website at nordicfintechmagazine.com. And please don't forget to subscribe to our channel and press the little small bell icon, which is the only way you can be sure that you'll be notified whenever we post new content. We hope to see you again in the next episode of The Future of here at Nordic Fintech Magazine.